Yeah.
By the way, we do have some breaking news right now from China. The finance minister saying that it will impose additional tariffs on U.S. goods from April 10th at a rate of 34%. Uh-oh. This is, and you were watching the market drop on this news. The futures are off by 650 points for the Dow right now, 80 points for the S&P 500, the NASDAQ 263 points. China's Commerce Ministry is announcing restrictions on some rare earths as well, but this was kind of the next shoe. This is what Scott Bessent, the Treasury Secretary here in the United States, was urging caution.
Remember Biden, don't.
Yeah, don't do it. Telling other countries to not put retaliatory tariffs back. But it sounds like that is exactly what China is going to be doing. So you can watch things ratcheting up right now.
For 1 second, I said, you know what? I'd rather not have a plus 200 or plus 300 futures right now, because
have a minus 625.
No, that's what I mean. I'm looking for anything, but because whenever it looks like an anemic bounce, it's just it's going to be sold.
Would be better than another leg down.
But the anemic bounce usually leads to another leg down, and the washout comes with something.
What this reminds me of, though, and you go back and you look at Smoot-Hawley and back in 1930, and people talk about now how these tariffs, in many ways, actually are more expansive and at higher rates. So if history is the guide, and you looked at global trade rates, global trade numbers, 1930, and then looked in 1931, this goes to the retaliatory issue that we're talking about here. Global trade dropped in 12 months by 60%. That's the number. That's the data. And so when you look and see what the risk is that this all portends, which is man-made, completely self-made, that's the risk in front of us.
Well,
maybe history is not the guide, and somehow this administration is right.
If you're doomed, not damned, damned to repeat it. If everybody, I'm back to. Everybody gets together and says we're going 0-0. That's the best outcome. A tariff-heavy world, I just don't think is something you aspire to. And maybe Trump is aspiring to that because of what you pointed out, that it's a way to replace some of the burden of income tax with tariffs. That's also a bygone idea from long ago when it worked, and there's no reason to think that necessarily would work again.
Okay, again, China saying 34% tariffs on all imported goods from the United States. If you're looking at a list of what they import from us, first up is agricultural products. They're a major importer of things like soybeans, corn, wheat, and other grains. Machinery and equipment from the United States, including industrial machinery, vehicles and parts, electronic equipment, including semiconductors and integrated circuits, mineral fuels. The trade deficit in 2024 with China was $295.4 billion. But those are going to be the sectors where maybe you should start looking at some of these things, too. We should probably take a look at soybean prices when we get a chance on some of these things, and we will do that.
And Jeremy Siegel, Andrew, you got Jeremy Siegel. You're going to lead that in the next block. He's a historian, market historian, and he's kind of a calming voice at times. Well, we may be using that 2-year chart again of the S&P just to keep it in perspective before we all, find a higher floor to come from. Or
if you look at a 1 week, it might look a little concerning too. Again, perspectives on all of these things, but it is a pretty significant move. Back-to-back days here if you're looking at the futures this morning. Again, if you're just waking up, China just saying that it is going to be posing 34% tariffs on all imported goods coming from the United States. As a result, we've seen the futures take another leg down. Dow futures at this point off by 675 points. S&P futures down by 85. The NASDAQ off by about 280 points. When we return, we will have much more on yesterday's market wipeout and what the additional losses are today.
We want to get that wipeout word in. I know. We definitely want to get that in.
Billions yesterday, more than $200 billion in a day. And we're going to tell you who got hit the hardest.